Hello everyone, we are from course PFM 3023 Financial Management. We'll present about the financial analysis and projection report for Digi Berhad and Maxis Berhad. We are from Group 4. Digi.com Berhad, Digi, is an investment holding company. The company is primarily engaged in the provision of mobile communication services and its related product in Malaysia. Digi's subsidiaries are engaged in the establishment, maintenance and provision of telecommunication and related services, and property holding, renting of premises and other related service. During the year ended December 31, 2011, it introduced Digi Ideal. During 2011, it launched the Digi Opera Mini Browser and also launched the Digi Simple Mastercard. Digi Opera Mini Browser enables non-smartphone users to gain access to the internet. Digi Simple Mastercard is Malaysia Telco branded prepaid payment card. In terms of mobile internet customers, Digi reported a number of all small screen users totaling 5.2 million during 2011. It added close to 1.2 million new customers in 2011. Its wholly owned subsidiaries include Digi Telecommunications SYAHMI Berhad and Pay by Mobile SYAHMI Berhad. It is part of the Telenor Group. Digi's purpose is advancing and inspiring society. Digi's vision is to be the nation's top telco tech company. Digi's values is customer obsessed, performing relentlessly, stronger together and responsible and caring. And lastly, for Digi is Digi's brand spirit, which is creating a world inspired by you. Maxis Berhad Maxis is a mobile communication service provider in Malaysia. The company operates in three segments, which is mobile services, fixed line services and international gateway services. The company operates its postpaid mobile service under the Maxis brand and its prepaid mobile service under the Hotlink brand. The company fixed line service comprises of a suite of services, data services, internet protocol, IP, and managed services to consumers and business customers. Its international gateway service comprises service to international telecommunication carriers for termination of traffic into Malaysia, service to send its own international traffic abroad, and bandwidth leasing services. On October 1st, 2009, the company acquired Maxis Mobile Service Berhad, Maxis Broadband Berhad, Maxis International Berhad, Maxis Mobile Sender Berhad, Maxis Collection Sender Berhad, and Maxis Multimedia Sender Berhad, and 75% interest in Advanced Wireless Technologies Berhad. Maxis' purpose exists to bring together the best of technology to help people, business, and the nation to always be ahead in a changing world. Maxis' vision is be the leading converged solution provider in Malaysia. Maxis have corporate strategy and sustainability, which is Maxis for all, converged solution leader to individuals, home and business. Achieve UPE, which is differentiate a digital unmatched personalized experience, UPE. Maxis way, world-class, effective and efficient organization. Lastly, for the Maxis is sustainability. Maxis for all is digitally inclusive society, achieve UPE, green operation and sustainable living, and lastly Maxis way, people empowerment and organization integrity. For the current ratio, in 2021, Digi Berhad has 0.49 ringgit in current asset for every 1 ringgit in current liabilities, while Maxis Berhad has 0.48 ringgit in current assets for every 1 ringgit in current liabilities. It shows that Digi Berhad's liquidity on that year is higher than Maxis Berhad. In 2022, Digi Berhad has 0.49 ringgit in current assets for every 1 ringgit in current liabilities, while Maxis Berhad has 0.63 ringgit in current assets for every 1 ringgit in current liabilities. It shows that Digi Berhad's liquidity on that year is lower than Maxis Berhad. Overall, there was no improvement for Digi Berhad. However, there was an increase of 0.15 for Maxis Berhad. For asset test ratio, in 2021, Digi Berhad has 1.06 ringgit in quick assets for every 1 ringgit in current debt, while Maxis Berhad has 0.48 in quick assets for every 1 ringgit in current debt. It shows that Digi Berhad is more liquid on the year than Maxis Berhad. In 2022, Digi Berhad has 0.44 ringgit in quick assets for every 1 ringgit in current debt, while Maxis Berhad has 0.62 ringgit in quick assets for every 1 ringgit in current debt. It shows that Digi Berhad is less liquid on the year than Maxis Berhad. Overall, there was a decrease of 0.62 for Digi Berhad, while Maxis Berhad experienced an increase of 0.14. For days in receivable, in 2021, Digi Berhad collected accounts receivable in 60 days, while Maxis Berhad collected accounts receivable in 71 days. It shows that Digi Berhad is faster than Maxis Berhad in collecting accounts receivable on that year. In 2022, Digi Berhad collected accounts receivable in 130 days, while Maxis Berhad collected accounts receivable in 79 days. It shows that Digi Berhad is slower than Maxis Berhad in collecting accounts receivable on that year. Overall, Digi Berhad and Maxis Berhad experienced an increase of 70.11 and 7.97 respectively. For accounts receivable turnover, in 2021, Digi Berhad's accounts receivable has rolled over 6.03 times, while Maxis Berhad's account receivable has rolled over 5.09 times. It shows that Digi Berhad is faster than Maxis Berhad in collecting accounts receivable on that year. In 2022, Digi Berhad's account receivable has rolled over 2.79 times, while Maxis Berhad's account receivable has rolled over 4.58 times. It shows that Digi Berhad is slower than Maxis Berhad in collecting accounts receivable on that year. Overall, Digi Berhad and Maxis Berhad experienced a decrease of 3.24% and 0.51 respectively. For days in inventory, in 2021, Digi Berhad carries inventory for 8 days, while Maxis Berhad carries inventory for less than 1 day. It shows that Digi Berhad carries inventory for a longer time than Maxis Berhad on that year. In 2022, Digi Berhad carries inventory for 10 days, while Maxis Berhad carries inventory for less than 1 day. It shows that Digi Berhad carries inventory for a longer time than Maxis Berhad, also in 2022. Overall, Digi Berhad and Maxis Berhad experienced an increase of 1.99 and 0.12 respectively. For the inventory turnover, in 2021, Digi Berhad's inventory sold and replaced 40.87 times, while Maxis Berhad's inventories sold and replaced 1,554.4 times. It shows that Digi Berhad moved inventory slower than Maxis Berhad on that year. In 2022, Digi Berhad's inventories sold and replaced 33.41 times, while Maxis Berhad inventories sold and replaced 1,038.63 times. It shows that Digi Berhad moved inventory slower than Maxis Berhad on that year. Overall, Digi Berhad and Maxis Berhad experienced a decrease of 7.46 and 515.77 respectively.
Okay, next we go to operating profitability. So the first one is operating return on asset. In 2021, Digi Berhad had an operating return of asset of 18.98%, indicating that the company generate operating income equal to approximately 18.98% of its average total assets. This suggests a relatively high level of efficiency in utilizing its asset to generate operating income. In 2022, Digi Berhad's operating return of asset declined to 3.17%. This significant decrease suggests a substantial drop in the company's ability to generate operating income from its asset compared to the previous year. A lower return of asset may indicate challenge in operational efficiency or change in the business environment. In 2021, Maxis Berhad had an operating return of asset of 6.12%. This suggests that the company generated operating income equivalent to approximately 6.12% of its average of total assets. The interpretation could be that Maxis Berhad was moderately efficient in utilizing its asset to generate operating income. In 2022, Maxis Berhad's operating return of asset increased slightly to 6.21%. This marginal increase may indicate improved efficiency in the utilization of assets for generating operating income. However, the change is relatively small. Second one is operating profit margin. In 2021, Digi Berhad had a relatively high operating profit margin of 23.48%. This indicates that the company was able to retain approximately 23.48% of its total revenue as operating profit after covering the cost of goods sold and operating expenses. A higher operating profit margin suggests strong operational efficiency and profitability. In 2022, Digi Berhad's operating profit margin declined to 17.58%. The decrease suggests that the company retained a lower percentage of its revenue as operating profit compared to the previous year. Possible reasons for the decline could include increased operating expenses, change in pricing strategies, or shift in the competitive landscape. In 2021, Maxis Berhad had an operating profit margin of 14.87%. This indicates that the company retained approximately 14.87% of its total revenue as operating profit. While not as high as Digi Berhad's margin, it still suggests a reasonable level of operational efficiency in 2022. Maxis Berhad operating profit margin decreased slightly to 14.62%. The marginal decline suggests a modest reduction in the percentage of revenue retained as operating profit. Similar to Digi Berhad, potential reasons for the decrease may include change in cost, pricing, or market condition. Next is total asset turnover. In 2021, Digi Berhad had a total assets turnover of 0.81. This implies that on average, the company generates RM0.81 in revenue for every 1 ringgit of total assets. A relatively high ratio suggests efficient utilization of assets to generate sales. In 2022, Digi Berhad's total asset turnover dropped significantly to 0.18. This indicates a substantial decrease in the efficiency of using assets to generate revenue. Possible reasons for such a drastic decline could include change in the business model, decreased sales, or challenge in operational efficiency. In 2021, Maxis Berhad had a total assets turnover of 0.41. This suggests that on average, the company generates RM0.41 in revenue for every RM1 ringgit of total assets. While not as high as Digi Berhad ratio, it still indicates a reasonable level of asset efficiency. In 2022, Maxis Berhad's total asset turnover increased slightly to 0.42. The marginal improvement suggests a modest enhancement in the efficiency of utilizing assets to generate revenue. This could be due to better operational performance or increased sales. The last one is fixed assets turnover. In 2021, Digi Berhad had a fixed asset turnover of 2.21. This suggests that on average, the company generates 2.21 units of revenue for every unit of fixed asset. A high ratio indicates efficient utilization of fixed asset to generate sales. In 2022, Digi Berhad fixed asset turnover dropped significantly to 1.06. This indicates a substantial decrease in the efficiency of using fixed asset to generate revenue. Possible reasons for such a decline could include change in business operation, decreased sales, or challenge in optimizing the use of fixed asset. In 2021, Maxis Berhad had a fixed asset turnover of 1.64. This suggests that on average the company generates 1.64 units of revenue for every unit of fixed asset. While not as high as Digi Berhad ratio, it still indicates a reasonable level of efficiency in utilizing fixed asset. In 2022, Maxis Berhad fixed asset turnover increased to 1.89. The rise in the ratio suggests an improvement in the efficiency of using fixed asset to generate revenue. This could be due to better operational performance, increased sales, or more effective utilization of fixed asset.
We move to the financing decision. First, it is about debt ratio. In 2021, Digi Berhad debt ratio is 63.26%, while Maxis Berhad debt ratio is 17.03%, which mean that the both company total assets are financed through debt. The remaining the assets are funded through other resources. In 2022, Digi Berhad debt ratio is 39.65%, while Maxis Berhad debt ratio is 72.35%, which means that the both company total assets are financed through debt. The remaining assets are funded through other resources. Overall, Digi Berhad experienced a decrease to 6.66, while Maxis Berhad experienced an increase of 2.32%. This indicates that Digi had a better debt ratio than Maxis in both 2021 and 2022. Second and lastly is about time interest earned. In 2021, Digi Berhad time interest earned is 16.09, while Maxis Berhad time interest earned is 44.36. That means earning before interest and tax are 16 and 44 times higher than its interest expense. This ratio indicates a strong ability to cover interest payment with operating income for both companies. In 2022, Digi Berhad time interest earned is 10.16, while Maxis Berhad time interest earned is 39.08. That means earning before interest and tax are 10 and 39 times higher than its interest expense. This ratio indicates a strong ability to cover interest payment with operating income for both companies. Overall, Digi Berhad and Maxis Berhad experienced a decrease of 5.93 and 5.2x respectively. This indicates that the time interest earned ratio for Maxis appear to have a better performance in both 2021 and 2022 compared to Digi. This is because Maxis has a higher ratio because it has a stronger ability to cover interest payment with operating income.
Hello everyone, so today I will delve into the return of equity performance for two prominent telecommunication companies, Digi Berhad and Maxis, over the years 2021 and 2022. Our graph illustrates the return of equity for Digi Berhad and Maxis in the year of 2021 and 2022. The bars represent the percentage of return each company generated for every unit of shareholder equity. Let's start with Digi Berhad. In 2021, Digi Berhad bars stand at a moderate height of 1.69%, indicating a decent return for each unit of shareholder equity. However, in 2022, the bar noticeably shrink to 1.19%, reflecting a decrease in profitability. This decline prompts question about the factor influencing these changes. Now let's analysis the Maxis. For Maxis, the 2021 bar is shorter, standing at 0.2%, suggesting a relatively modest profit margin concerning shareholder equity. In 2022, the bar drops slightly to 0.19%, indicating a challenge for Maxis in sustaining profitability. So, by comparing the bar between Digi and Maxis, it's evident that Digi had higher return of equity in both years, showcasing a more robust performance in terms of generating profits relative to shareholder equity. Despite the decline in return of equity for both companies in 2022, Digi still maintained a higher level, raising question about Maxis' ability to compete with Digi.
So I will explain about the company financial strength and weakness for Digi Berhad and Maxis Berhad. The strength for Digi Berhad, they have a diversity commitment, and for the company ratio, their liquidity ratio, profitability ratio, in the efficiency ratio, and lastly the solvency ratio in a good position to maintain their business. For their weakness, for Digi Berhad, coverage and service quality, being dispute for the third-party contact provider, competitive plan and price point, the pace of 5G and lot of implementation, connectivity option and service. And for the company ratio, their liquidity ratio, profitability ratio, efficiency ratio, solvency ratio, and the return on equity, they need to overlook it for to enhance their company. Next, for the Maxis Berhad, the strength, they have network quality and coverage, data privacy and protection, digital inclusion and innovation, sustainable business growth, crisis management and response. And for the company ratio, they have good liquidity ratio, profitability ratio, efficiency ratio, and the solvency ratio. And lastly, for the weakness of Maxis Berhad, because of the COVID-19 pandemic, their business turning down for a moment, and then increasing saturated market. And for the long-term effect of prolonged lockdown, and for the company ratio, they need to overlook for the liquidity ratio, profitability ratio, solvency ratio, and lastly the return on equity ratio. Then we go to the factors that may affect current and future performance. The analysis for Digi Berhad and Maxis Berhad in 2021 and 2022 reveals change in key performance indicators. Various factors may contribute to this change, influencing both current and future performance. The first one is industry dynamics. Change in telecommunication industry regulation, technological advancements, or shift in consumer behavior, anticipation of industry trends, and the ability to adapt to change in technology and market demand. Second is economic condition. Economic downturns or disruption due to external events, example global crisis, impacting consumer spending and business operation. Economic recovery or continued challenge may influence overall market condition and industry growth. Next one is competitive landscape. Pricing pressure, market share dynamics, and aggressive marketing strategies. Ability to maintain or enhance competitiveness through innovative offerings, superior customer service, and effective marketing. Last one is technological change. Rapid advancement in technology affecting infrastructure requirements and operational efficiency. Investment in cutting-edge technology to stay competitive and meet evolving customer expectations. Then the factors that may affect current and future performance of Digi Berhad. The first one is operational efficiency. Change in operational efficiency affecting return on asset, ROA, and profit margins. Implementation of cost-saving measure, process improvements, or strategy initiative to enhance operational efficiency. Next one is strategic investment. impact of recent capital expenditures or strategic investment on fixed asset turnover, anticipation of returns from recent investment and the strategic alignment of future capital expenditure. Last one is customer acquisition and retention. Change in customer acquisition costs and customer retention strategies, efforts to acquire and retain customers, including new product offering and customer experience enhancements. Then we go to the factors that may affect current and future performance of Maxis Berhad. First one is revenue mix and diversification. Change in the revenue mix and the impact on total asset turnover, efforts to diversify revenue streams and adapt to evolving market demands. Second one is operational efficiency and cost management. Efficiency improvements impacting profit margins. Continue focus on operational efficiency and cost management to sustain or enhance profitability. The last one is strategic initiative. Recent strategic initiative and their impact on financial performance, execution of ongoing strategic plans, and the development of new initiative.
Next, how make the company better capitalize on non-financial factor? First, network quality. Both companies also must do maintenance every month to identify and solve the problem to avoid problems that might face to the customer. In conclusion, to give customer satisfaction, both companies must provide good and stable quality internet. Second, customer service and communication. Customer service and communication team for both companies shall be quick, responsive, and effective for customer when they need help. This is because quick resolution of issue related to the internet and good communication skill can give satisfaction to customer to stay and use their service. Third, innovation in service. Both companies shall offer new technologies such as 5G internet because 5G is also important to improve the speed of the internet to all places in Malaysia. Then, both companies shall improve their app to be more user-friendly and easy to use. It is to ensure that the user interface for the service is intuitive and user-friendly. A positive user experience contribute to overall customer satisfaction. Next, corporate social responsibility. Both companies shall engage more CSR activity with local community through sponsorship, partnership, and community outreach program. This shows a commitment to being a responsible corporate citizen, and this also can contribute to a positive corporate image to society. This also can contribute to more customers using their service. Lastly, customer feedback and improvement. Both companies shall gather all regular feedback from customers and use this feedback to identify areas for improvement and address customer concern promptly. This is because from the feedback both companies can do continuously improvement by regularly updating and changing service based on customer feedback and technological advancements.
Next, I will give a brief analysis where we will explore the most significant internal risks affecting the financial performance of our two key players in telecommunication sector, Digi Berhad and Maxis. So as you can see, there is 8 prominent factors that I have listed down. The first one is operational inefficiencies. Operational challenges like supply chain disruption, technological failure, or an inadequate process may impede day-to-day activities, affecting cost management and service delivery. The second factor is changes in management or leadership. So sudden shift in key leadership position or management strategies can introduce uncertainty, potential impacting the strategic direction and overall performance of both Digi Berhad and Maxis. The third factor is competitive pressure. The telecommunication industry is fiercely competitive. New entrants, changing consumer preferences, or aggressive competitor strategies pose challenge. Failure to adapt may lead to a decline in market share and in financial performance. The next factor is technological disruption. In a rapid pace of technological investment, especially the shift to 5G, poses a risk failure to adapt may affect competitiveness, requiring substantially investment in infrastructure. The next challenges is regulatory compliance and legal risks. Operating in highly regulated environment, changes in regulation or legal issues can pose significant risks, potentially resulting in fines, legal expenses, and regulatory challenges for both company, which is Maxis and Digi. The next threat or the next factor is cybersecurity threat. With increasing reliance on digital technologies, both Digi and Maxis face the risk of cyber threat. Data breaches or service disruption due to cyber attack can lead to financial losses and damage their reputation. The next factor is capital structure and debt level. The financial health of both companies is influenced by their capital structure. High level of debts or inadequate management of financial leverage could increase interest expenses, impacting profitability and financial stability. The next factor that may influence their financial performance is their customer retention and satisfaction. In the telecommunication sector, sustaining customer loyalty is very critical. Issues related to poor customer service, network quality, or failure to meet evolving customer expectation could lead to a churn, negatively impacting revenue and profitability. So, in conclusion, as we conclude this, it is evident that both Digi and Maxis face a lot of internal risks. Stakeholders, investor, and management could remain vigilant, addressing these challenges to ensure the sustained and financial health of these telecom giants.
Next, we move to the recommendation for investment or lending opportunity for Digi Berhad and Maxis Berhad. First is lower your price. Lowering price for a company involves careful consideration to maintain profitability and competitiveness. Lowering price as a strategy for investment or lending opportunity require careful consideration to balance competitiveness and financial stability. Some strategies are market research, cost reduction analysis, efficiency improvement, supplier negotiation, and lastly is customer loyalty programs. Second is lower your expenses. Reducing expenses is a strategic move to enhance the financial health of a company and make it more appealing for investment or lending opportunity to improve efficiency and financial health. Some strategies are aspect analysis, budget review, negotiate with supplier, technology optimization, energy efficiency, and lastly is trading programs. And lastly is recover outstanding payment. Recovering outstanding payment is crucial for maintaining a healthy cash flow for a company, such as unpaid invoice can harm your cash flow and the overall health of your business finance. Some strategies are clear payment terms, automated payment reminders, customer communication, late payment penalty, and lastly is partial payments and installments.
Next, focus of the company future performance. First, debt and financial aspect. Both companies shall carefully manage the debt level to help the company mitigate financial risk. Excessive debt can lead to the financial distress, especially if interest rate rise or economic condition get worse. Second, social and demographic trend aspect. Both companies shall identify what internet package that are suitable can give an affordable price to create good competition to each company. This is also because everyone uses the internet in daily life and it will continue in the future. So the company shall decide and identify which internet package is suitable for every age group. Third, strategic initiative aspect. Both companies shall build and upgrade network infrastructure is a critical aspect of the telecommunication business for time to time. This can attract more customers to use their service in the future. Lastly, using latest technology. Both companies should stay up to date with technological trends that are relevant to remain competitive, improve service delivery, and meet evolving customer demand. For the future, both companies should quickly adapt and use new technology, such as 5G technology, to increase the speed of the internet and attract new customers to use their service. Both companies should increase their internet coverage area to make sure customers get certification and can avoid poor internet in customer area.
Next, let's explore the strategic recommendation for Digi Berhad and Maxis. What should they do next? So, there is a 10 strategy that they could do that I have listed down here. The first one is strategic cost management. Optimizing operational costs and enhancing efficiency through cost-benefit analysis and streamlined process will contribute to improve profitability for both Digi and Maxis. The next one is technology investment. In light of rapid technological advancement, strategic investment in upgrading and expanding technological infrastructure, especially in embracing 5G right now, will be very crucial for Digi and Maxis to maintain their competitiveness. The next one is robust risk management framework. What does this mean? So, robust risk management framework basically means establishing a comprehensive risk management framework to identify, assess, and mitigate potential risks, including operational risks, regulatory, cybersecurity threat. Is very essential. This is very essential for proactive problem solving. The next one, the next strategy is leadership continuity and talent development. Ensuring stability in leadership and investing in talent development will create skilled and adaptable workforce capable of navigating challenges in the ever-evolving telecommunication industry. The next strategy is customer experience enhancement. So, prioritize customer satisfaction and loyalty by investing in customer service initiative, addressing network quality issues, and staying attuned to evolving customer expectation to reduce churn and attract new subscriber. And the next strategy is diversification of the revenue stream. Maxis and Digi Berhad can mitigate market fluctuation and competitive pressure by exploring opportunities for diversification. This could involve expanding service, entering new market, or developing strategic partnership. The next strategy for Digi Berhad and Maxis is regulatory compliance. Maintain a proactive approach to regulatory compliance by regularly updating policies and ensuring adherence to industry standard, minimizing the risk of legal challenges and the regulatory penalties. The next strategy is the cybersecurity preparedness. So strengthen cybersecurity measures through regular assessment, employee training, programs, and collaboration with expert to protect sensitive data and ensure uninterrupted service and data breaches. The next one is capital structure optimization. Evaluate and optimize the capital structure to achieve a balance between debts and equity. Assessing the cost of capital and ensuring a sustainable financial structure for long-term growth. And of course, the last one is continuous performance monitoring. Establishing a robust system for continuous performance monitoring, regularly reviewing key financial metrics, industry trends, and internal operation for informed strategic decision making. So, in conclusion, implementing this recommendation, all of these 10 recommendations will position Digi Berhad and Maxis to navigate challenges successfully, ensuring a sustained growth, financial stability, and competitiveness in the dynamic telecommunication market. Thank you.